Hello and welcome back to Southbank Live. Another week, another episode for our YouTube live show where we discuss the week's events in markets and some of the themes which people may be missing. My name is Boaz and I'm joined once again by John Butler. John, how are you getting on this evening?
Very well, Buzz. How about you?
Very well indeed. So much for us to discuss. I think we've got quite a roster of interesting topics. Not all of these that we actually managed to list in our email about this, which we'll get onto. Thanks again to everybody who is tuning in this evening. It's always good to have a bit of company and, of course, to see some of the comments and some of the questions that you have to ask during this show. So just to start off with, I thought we could break the ice with a bit of a celebration, actually, John, if you could call it that. $30 trillion. Even today, that is a big number. And it's, the US government's deficit. They have managed to borrow $30 trillion. You Americans are so good at going big or going home. Here in the UK, we are a measly, I believe it's 2.23 trillion pounds in debt, which is just over $3 trillion. And over in the US, you've gone 10 times bigger. So, congratulations. Cheers, indeed, to the first 30 trillion, and cheers to the next 30 trillion that will inevitably be coming our way. John, have you any words you'd like to commemorate the occasion with?
Well, only that, in a way, 30 trillion is an arbitrary number, and yet it does give us an occasion to review what the trend has been in the growth of the US debt. And what's concerning, of course, is that it's following a typical exponential growth path because there's never been, in decades now, a serious and sustainable effort to try and slow the rate of increase of that debt.
Yep.
And so you are on, this exponential path, which anyone can tell you is unsustainable. And of course, it's not the debt itself, right? It's debt to GDP, debt to gross domestic product, debt relative to the economy's ability to service that debt without resort to some combination of devaluation and default. So, something's got to give at some point. That which can't go on won't. And this is just a timely round number reminder of that truism.
It is wild how 30 trillion. If you just ask somebody how much, to imagine $30 billion, and then ask them to imagine 30 trillion. I mean, they probably wouldn't imagine a huge amount of difference, despite one being so much bigger than the other one. And it just kind of goes to show how our sort of perception of this thing has gone completely out of control. That we've suddenly gone to 30 trillion.
Yeah, the only way to really make sense of it is to understand how much of that is owed, per household, per taxpayer, per capita, to compare it to the growth rate, compare it to the serviceability, to sort of look at it kind of in ratio terms or per person, per household terms. And then you start to get some perspective. And that's where it gets really disturbing, because if you look at it in per taxpayer terms, the amount that's owed literally is several years of a typical working American's income. And think about that. Most people, when they take out a mortgage, the mortgage is worth several years, maybe 5 years if they stretch it, or 6 years of their pre-tax income. Well, this is roughly half again that. Anyway, it's a big number. Okay, it's not just we can't get a sense of it big number. It's a big number even when you try to put it in understandable terms.
Yeah, even in early 2020s terms, 30 trillion still stands out a little bit. Would be there are so many ways we could go with that. When we were discussing this, and we've discussed this in previous episodes on how when most of this debt is coming due. Under Mnuchin's term, under Trump, he made a big concerted effort to refinance America's debt from long dated debt, so it was maturing in say 10, 20 years to much shorter term debt because the interest was lower. And this makes the US government much more sensitive to rises in interest rates. And we have seen a bit of that so far. And it would be interesting to know some of your general thoughts on whether or not this will become a problem. Like, obviously, these things continue until they can't. But are we close to that?
Well, you're always getting closer, right? It's kind of like an asymptote function in mathematics. You're always getting closer to the singularity doomsday,
Right.
right? Call it what
Yeah.
you will, right? So you are always getting closer. Now, the United States occupies this unique position in the global economy in that it issues the reserve currency, meaning it can finance its debt. Relying not only on what are effectively captive domestic investors who are required by regulations to hold that debt. And they include the banks, they include insurance companies, they include pension funds, and certain other official institutions like the Federal Reserve itself. But then, of course, you have this huge global bid for the dollar as the global reserve, and so there are all these natural buyers for treasuries, and that relieves the natural market pressure or the so-called bond market vigilantes who would drive up the cost of servicing and rolling over that debt, given the fact that it's clearly becoming a very, very large number in any reasonable historical comparison. So again, it look, in a sense, it's already a problem in that it is a drag on growth, even at low interest rates, right? The share of debt service as a portion of the federal budget is in the double digits. I mean, it's not a small figure. And it's also high in the UK, of course. In fact, it's high in most European countries. So it is a material factor in that sense. But there's nothing about where we are today that makes, that singularity, that doomsday of suddenly being unable to service that debt any closer in any timing way. That so it basically, it just means that if you're an investor, you want to be aware of this, and you want to have some insurance against a debt crisis, not only in the United States, but also in any country that has a very, very large national debt relative to its GDP in any reasonable historical comparison. That, you've got the US, the UK, and most European countries in that category. They are all in danger of some combination of devaluation and default within the lifetime of probably just about everybody who's on this call.
Yeah, yeah, it does. I mean, we're laughing about it, but it is, if you don't laugh, you cry, I suppose. I do wonder, if American Express allowed you to borrow $30 trillion, I do wonder what the card would look like. I mean, they're already big on the really heavy metal cards.
Ah,
They already
yeah.
make the gold ones and so on. So, if it was $30 trillion, what would the card look like? What would it be made out of? Maybe a few folks in the chat could suggest some. I'm thinking maybe plutonium or something, because they already make
Well,
the gold
that's
equivalent ones.
interesting, right? Because obviously, when a national debt reaches a level that is not serviceable, you could argue that debt, by definition, is toxic. Because some people look. Let's understand this, right? If you have to fight a war, maybe you go into debt to finance the war, especially if it's a defensive war. I mean, come on, you got to defend yourself, right?
Right.
So you're all in it together, and you go ahead and you finance it that way. Okay. What if, for example, you're going to build a motorway network? What if you're going to build ports? What if you're going to build public goods and infrastructure, which you would hope for a very, very long period of time, decades, if not centuries, will support generally healthy growth and, of course, the tax base to service the debt that you incur to finance those projects. So in a way, you could say, okay, fine, there's nothing inherently wrong with national debt. But even if it's being used to finance things that are good on paper, once it becomes unserviceable, even then it's toxic. By definition, you've overdone it, you've overinvested, you've overspent.
Yeah.
God forbid you're in debt to finance the welfare state, to finance pure consumption in the here and now rather than investment in the future. That's a really toxic combination. And I am not the only one who believes that we kind of crossed that particular Rubicon into plutonium debt, as it were, where you might have a plutonium card to run up the bill even more. We crossed that years ago, in my opinion.
Yeah, it's yeah, what's the classic Hemingway quote? How did you go bankrupt slowly and then all at once? I think
Yeah,
it goes.
slowly, then quickly. No, in two ways, he says. I went bankrupt in two ways.
Right.
First slowly, then quickly. I think it's something like that.
Yeah, yeah, yeah. I
Yeah.
think it's the sun also rises. I
Yeah.
think that's the one. We do have some great activity in the chat.
Good.
The suggestion that such an Amex card would be made of unobtainium, depleted uranium, lead, kryptonite, quicksilver. Very interesting.
Oh,
I'd be
I like
interested.
all of these.
Yeah,
Good.
I think they're great. They're great. Well, some maybe more politically engaged comment here from Philip, uh, which probably doesn't bear commenting on this one. But it is great to see such an engaged chat this evening. We've got folks from deepest Oxfordshire. We've folks from Wales, Somerset. Very jealous indeed, Dennis, and indeed from London. One chap who says, "Good evening from Mars." Clearly a friend of Elon Musk's, I assume. And a very good evening. It's great to see everybody here this eve. We do have plenty further to discuss. So I think we could move on to our first subject of the evening. What was originally going to be our first, anyway. Before we started getting onto deficits and where they lead. Which is there's so much Russia in the news. And of course, we've got the Russia-Ukraine conflict, which we've discussed several times on the show already. But I think one thing I thought was quite interesting over the past week was Vladimir Putin's public support for Bitcoin. There's a couple of headlines I think we could take a look at here. I think the first one, from Bloomberg, Putin backs crypto mining despite the Bank of Russia's hardline. That's the Russian central bank. And I think there was another one this is from The Street, with Vladimir Putin boasting the competitive advantages in Bitcoin mining in Russia. Some interesting public support from Putin there for Bitcoin and for the crypto space more broadly there. Quite interesting. Like, John, what do you make of that? What do you think Putin's game is here with suddenly coming out in support of Bitcoin? Is this because he wants Bitcoin to help him evade sanctions, as these are now getting threatened very publicly by NATO?
Well, look, I don't think that's a practical way to avoid sanctions when you are a senior Russian, government official, because at that point you would be talking about moving quite large sums, and that would be look for. The issue here, in my opinion, is first of all is not Putin suddenly going on some Bitcoin offensive. I think what's happened here is he was asked about it, and he sort of offered his opinion, which in a way is entirely reasonable, by saying that Russia has natural advantages. Well, they do for
Yep.
Bitcoin mining because they have the energy. Bitcoin's, as we've discussed many times before, Bitcoin is very energy intensive. Now, some people say that's a fatal flaw. Others say it's merely a challenge that can be overcome. But regardless, Russia has the cheaper energy. And so other factors equal, it does lend itself to be a location for Bitcoin mining. But whether Putin was suggesting that Russia could use Bitcoin to avoid sanctions, possibly. But really what he's saying is that, I believe, and this is what he said before, which is that it would be a mistake for the United States or other, NATO Western powers to try and use sanctions as a means of causing difficulties for Russia, because Russia does have ways to evade them. Bitcoin, he may have just thrown that out there as one other way. What's been discussed for years, Russia and China have discussed using their own currencies in bilateral trade, and indeed around the margins. I believe they started doing that some time ago. Similar discussions apparently have taken place between Russia and Iran, and Russia and Turkey, which is really interesting because Turkey's a NATO member. But we also know that Turkey and Iran apparently transacted in gold for a time to try and evade U.S. sanctions on Iran. And apparently that was funneled through the UAE. So you actually had quite a few countries getting creative to find ways to evade U.S. sanctions. So Putin might have just been sort of offering Bitcoin as sort of yet another avenue. The real problem, of course, is that if the U.S. and NATO get heavy-handed in imposing sanctions on Russia, basically saying you can't use the dollar in international trade, you can't use SWIFT, then, of course, there'll be a big, big problem if Europe still wants to purchase gas or other forms of energy from Russia. What are they going to use? What if Russia also doesn't want to accept euros? What if they are willing to accept euros and yet not dollars? And the U.S. says, well, wait a minute, you're NATO members. You can't even trade in euros with Russia. Well, then NATO blows up. I think Look, it's not that easy just to put sanctions on Russia, and Russia has way more options available at its disposal than relying strictly on Bitcoin.
Yes, certainly. And we'll come back to the sanctions question at the end because I think it's a very interesting one, and it sounds, can often sound rather boring, economic sanctions and how they're, the UN has decided we are going to impose sanctions on X country, and it just becomes sort of a forgettable headline. But it's actually something that's very important for investors generally, especially if you have an international portfolio. But just winding it back to some of the headlines we saw there, what do you think Putin's gambit is, John, with promoting Bitcoin or promoting crypto in general in this way? Because Putin has had, he's got this sort of interesting take on crypto more generally. I remember, I think it was back in 2017, where he invited Vitalik Buterin, one of the founders, or the key founder really, of Ethereum, to have a chat about creating a Russian sovereign cryptocurrency. Nothing really came of that, but it was, he was clearly had some kind of interest or wanted to appear to have some kind of interest in crypto in that way. What do you think he's about with this?
I think it's part of a much more general view that Putin has, which is that he's lived his entire life in a world in which the dollar is the preeminent currency, and that confers big benefits on the United States. They can issue that currency for essentially zero cost to finance their trade deficit, and of course, that's also used to finance the U.S. defense apparatus, which is a huge component of NATO, which is on Russia's border effectively nowadays. And so pretty much anything that becomes a currency alternative for international trade, not only for Russia, but for just about anyone, in a way could sort of ebb away at the dollar's dominant position, not all at once, but perhaps over time. And so other national currencies, again, as I mentioned a moment ago, Russia and China have for years been discussing ways in which they could rely more on their own national currencies for bilateral trade. But then why not throw crypto into the mix? Why not get creative? Anything that's not the dollar, in a way, could be seen by Russia as a possible way forward to try and reduce the dollar's dominant position, and the disproportionate benefits that allows the U.S., including the financing of its military apparatus, and sort of levels the international playing field in economic terms, but also perhaps again in defense terms, in national security terms.
Yeah, I think you're quite right, John, to point out that it's not necessarily one escape valve that you have for this. So a lot of people say, Russia's going to get around this using gold, or they're going to get around this using the euro, or they're going to get around this using crypto, or all manner of other, but it's always a single avenue of exit. But actually, it's kind of a big bucket of things. You can take this; it's almost a portfolio of
That's right.
evasive strategies here for allowing your country to keep trading with the rest of the world.
That's right. I think Putin's attitude is kind of, if it's not about the dollar, I'm willing to at least have an open mind.
Yeah, very, very entrepreneurial and very open-minded there from Putin. Just looking at the chat, Phil says, "Great to see you both again, Phil. It's great to have you here." And we have folks from all over. We've got Torbay. Hello to Torbay. Good day, Stuart. And indeed from Hampshire. That's Terry in Hampshire. Great to have you here. We do have a few questions as well, which I would like to, which we shall address. Roger and Jason, yes, indeed, I am drinking Guinness. Though this is blasphemy. This is out of a Carling glass. So
Dear.
I'm not sure I'm going to be able to get the Southbank Live sponsorship from Guinness quite yet. We're working on it. Hopefully, they will. A representative in Dublin, will be watching this and giving me some of the free goodies. Now, in terms of staying still somewhat on the Russian topic, and indeed still on the crypto topic, there's this next headline which I thought was very interesting. And this was Gary Kasparov, the chess grandmaster, who says cryptocurrencies are the future and could replace the dollar in 10 years. Gary Kasparov, very interesting man. Of course, incredible chess player. If you're a fan of the game or the sport, very controversial to say whether or not chess is a sport or not. But Gary Kasparov, very, very interesting. He's very pro-America in general as well, which I found, which is also interesting when he's talking about dethroning the dollar. If I recall correctly, he was pretty pro regime change in Syria and American intervention there, which is not which is not something that people who are generally on the pro-Russia side would say. Garry Kasparov is also very, very critical of Vladimir Putin. So this is an interesting state of affairs for him to say that. John, should we trust the opinions of chess grandmasters when it comes to the decisions on currencies and what the future of currencies are?
Well, look, I mean, look, obviously he's a brilliant guy, and he was top of the table in chess for a very long time. And I mean, I'm not quite sure whether his tenure, top of the table tenure, was the longest of any grandmaster in history, but he's on the short list. He's definitely on the short list.
Yeah, he's up there.
And so he's obviously a brilliant guy, and I think that he probably sees the way many people see the mathematical elegance that Bitcoin represents. I mean, it's a very elegant idea. The solution to the Byzantine general's problem, right? Not requiring third-party verification for transactions and so on and so forth. So I can see why he's drawn to it, intellectually. And then on the other hand, he can take a look at the way monetary policy is run in the United States today, and like just about anyone else, be critical of it, right? I mean, who's not critical of it anymore? There are very few people who still believe that the Fed has not made any mistakes in recent years and has been acting in a way which is sustainable and serves the interests of the economy as best it can, and so on and so forth. So I'm not sure it's a huge stretch to understand why he comes down the way he comes down. Although it is interesting, as you point out. He is also, he's been a huge vocal critic of Putin, for sure, and a general supporter of therefore, quite meaningful U.S. military and other diplomatic efforts to try and contain any perceived Russian ambition. So in this case, of course, you might say, "Oh, hold on, there's an inconsistency now. He's supporting crypto, when in fact that might dethrone the dollar and cause all sorts of problems for the U.S. to finance this 30 trillion and rapidly rising debt." He may not have connected those dots, but that doesn't mean that he hasn't reached his conclusions in ways that are invalid. It's just that they may ultimately, depending on what happens in the world, they may be somewhat mutually inconsistent. But I wouldn't go so far as to say he's suffering from cognitive dissonance. I don't think it's like that.
No, though I do find it interesting, the the prevalence of chess inside the financial sphere, because you do sometimes find a lot of people who are very into chess, but it's only as an amateur hobby. They are working in finance somewhat. Kenneth Rogoff, who is, I believe, probably as close as you get to a Bond villain as one can get that I can think of, who in the real world, apart from someone like Vladimir Putin. But that's a cheap shot answer. Rogoff is the man who wrote The Curse of Cash, and he's very much behind the abolition of cash. And writes in his book, The Curse of Cash, that we need to get rid of cash so we can establish negative interest rates. And he's this chess grandmaster, incredibly well connected. He has this his big bald head and very steely eyes, and always looks very assured of himself. And he always strikes me as something of a Bond villain, I guess. But it's interesting to see what the thoughts are of the chess, the higher ups. Of course, while a grandmaster, Rogoff is not nearly so accomplished as Garry Kasparov, but it will be interesting to see if this becomes more of a prominent theme. I mean, I'm not familiar with it in terms of history, but are there any prominent financial thinkers that you can think of, John, who are also really, really into chess? Is this a theme we should follow?
Not specifically, but as you point out, right, it's the same. I mean, the same ability to operate in a very, very analytical, logical, and quantitative way is a good toolkit for chess, and it's also a good toolkit to understand finance and economics. But one funny contrast to Kasparov specifically, let's leave Rogoff aside for a second, is that the previous grandmaster from back in the 60s and 70s, Bobby Fischer, I mean, he was American, of course,
Yep.
and he became hugely critical of the U.S. government. and so here you got Kasparov, who's ethnically Russian and all. It becomes hugely anti-Putin, and Bobby Fischer, who's American, becomes hugely anti-American. Maybe there's something about chess masters going totally off the rails over the course of their later careers. becoming big critics of their own governments, their own countries.
Yeah, I guess there's a political angle to chess where countries obviously want their native chess players to do very well, and Russia, of course, is very big on this. To this day, it was the same. It was true during the Soviet Union. It's true today when it comes to making sure that Russian chess is very well supported, and they're always pushing their own guys and stuff. So I can imagine how somebody who gets pushed a lot by the government might end up sort of rebelling against that. Though Bobby Fischer
Maybe.
was, of course, very he really did not like the U.S. government.
No.
But now enough chess. I've indulged too much of my hobby here. We shall look to a few of the questions before we come on to our next topic. I think lots of great questions in the chat today, and some great comments indeed. I think Cliff is absolutely dying for a Guinness, so I hope he gets one once he is off the bus. Now, just in terms of this is an early question, and this is just very strictly market related from Liam. Hello, Boaz and John. Hello, Liam. The Nasdaq and the FTSE 100 are down a combined 30% so far this year. Is it time to buy? Thanks, Liam. Well, we can't give financial advice in this. We're not here to give you tips on how to trade, etc. But in terms of valuations at the minute, we have seen an awful lot of volatility in the Nasdaq, which is, of course, in the tech side, and FTSE's not had a very good year either, John, though, of course, FTSE has a much different makeup than the Nasdaq. What's your thoughts on both of these from where they are now and where they might be by the end of the year?
Well, look, the Nasdaq went into this being expensive, in my opinion. I've said multiple times on episodes here in recent months that I felt big tech was way overvalued. I thought tech in general was way overvalued, and of course, tech is disproportionately represented in the Nasdaq, whereas the FTSE does not have much of a tech component. So whereas the Nasdaq, I believe, is going through what is an absolutely necessary correction to try and get valuations down to levels that have at least some basis in reality. The FTSE, it's a very different situation there. I believe that's a much more traditional. You have a stock market which is not particularly overvalued, but hey, you're facing an interest rate rise cycle. The economy is struggling because of all the COVID hangovers and the energy price rise in energy, which is squeezing consumers, and so on and so forth. I think that to the extent the FTSE is struggling, I think it's very traditional macroeconomic struggling, right, for a stock market. Whereas the NASDAQ coming down, I really think is just the hype repricing a bit lower to where it gets a little bit closer to reality.
Yeah, quite different kettle of fish, though it is interesting that they're both having a bad time at the minute. We do have another question from David, and I believe this is the same David who doesn't like the fact that we speak so much about America in our regular Southbank live. So, David, hope you're not too unhappy with how we've been speaking about so much about the States this show. But David asked, won't Bitcoin eventually take care of the national debt and the daft politicians? Well, we can always hope about the daft politicians, David, though I don't think even Bitcoin can do anything about that. Bitcoin maximalists, those who are very much on the Bitcoin side and think it really is the killer technology that will change the world, would say that the national debt won't matter so much when we get hyper Bitcoinization. But John, I think you're a bit more skeptical on this side. Is there any hope that Bitcoin could take care of these enormous national debt problems?
Well, look, I think the idea that Bitcoin could displace national currencies is not necessarily a bad one at all, because let's face it, I mean, money is a technology. And so Bitcoin is a subset. It's a specific monetary technology. But like any technology, it can be used for good or ill. It just is, right? Everything can be corrupted. Everything can be abused. Now, the nice thing about Bitcoin is that the algorithm is set up in a way which basically makes it impossible to corrupt at source. But that doesn't mean that people might choose to buy and sell Bitcoin in order to do things which are evil things. You're not going to change human nature just by changing the money. However, because so many countries, including the United States, in my opinion, including the UK, in my opinion, have severely abused their monetary authority in recent decades in ways that have destabilized their economies, caused financial crises, caused inflation, led to increasing wealth inequality, so on and so forth, I'm definitely willing to support any reasonable effort to try and reform those systems, either from within or without. Bitcoin obviously is a theoretical way to simply replace those currencies from without and give people an alternative. Now, I don't think it's that easy. Nothing in history suggests it would be that easy. But you kind of have to admire Bitcoin as waking people up to just how manipulated the system is nowadays in ways that I believe disproportionately favor the financial system and disproportionately favor the government itself in running up 30 trillion debts or whatever it is, and don't really serve society, households, individuals day to day the way a sound money would. Now, I do believe Bitcoin does have flaws. I don't believe it's the Holy Grail, and I certainly don't believe Bitcoin fixes human nature. But I believe it's making an honest effort and at least waking us up to these issues. And for that, I admire it.
Yeah, you don't have to be totally on board with it to still at least respect what it's done and manage to get all the young folks, the millennials, into questioning the fiat money system and who it serves, etc. We do have a question from Vincent, who's a regular watcher of the show. Evening, gents. Good evening, Vincent. What would a run on the US dollar look like? What's the first domino? Who fires the first shot? Is it China? Well, Vincent, there is a very good movie called Rollover, which was made in, I believe it was the early 80s when Rollover came out. It's a great film, though interestingly, it won a Razzie that year. And for those who aren't familiar, Razzies are the opposite of the Oscars, and they are only awarded to movies that are thought of as the worst of the year. And I watched Rollover, and I thought, wow, this is a great movie. I think it's Chris Christopherson and Jane Fonda, I believe, are the two main roles, and it posits the idea of the Saudi Arabians ditching the dollar and just buying lots and lots of gold. As a result, the petrodollar system collapses, and it causes this enormous societal collapse ultimately in America. Though it doesn't go too much into the what that looks like. It's mostly the lead up to that event, which I think is quite good. However, the modern world is a fair bit different. John, what would a run, or what could a run on the US dollar look like if everybody decided, actually, greenbacks aren't worth owning? I need to own something real. I need to own something tangible. What would it actually look like if you zoomed out?
Well, look, I've thought about this a lot, and indeed, I've seen the film Rollover as well. And in fact, I use it as an example in my book for describing what a run on the dollar could look like. Because in fact, the way Rollover presents it, I think, is plausible. Unlikely, perhaps, but certainly plausible. And there's a wonderful monologue roughly halfway through the film when Chris Christopherson's character has discovered what is a secret plan by not just the Saudis, but other oil producing countries to divest their dollars and acquire gold instead. And then only when they pretty much accomplished it for themselves, let it, sort of slowly leak out to the rest of the world that this is what's happened. The understanding being that at that point, there will be a run on the dollar, but they try to position themselves ahead of that. Yeah. So they use a very senior US private banker who is played by Hume Cronin, who was a phenomenal actor back in his day. And he gives this monologue to Chris Christopherson's character, basically saying, look, money and capital is a force of its own, like gravity. It flows where it wants to flow. We can either try to control it and contain it, or we can let it go like an unguided missile and wreak havoc. And he's basically telling Chris Christopherson, don't tell anybody, because yes, this is going to be disruptive, but oh my God, if it leaks out now, it's going to be even more disruptive. Okay. Yep. But this is kind of equivalent to the smoke in the movie theater. The thing is that you can try to get people to be calm and slowly evacuate the movie theater and not freak out, but in practice, it's damn difficult to do. If for some reason, and this is pure speculation on my part, if for some reason China, Russia, perhaps all the BRIC countries in concert, as I speculate in my book, perhaps also some countries that are beginning to behave in a neutral fashion in international affairs, such as Turkey or Germany or France even, if they start to divest of their dollars and acquire other foreign currencies and possibly gold instead, that becomes a non-linear process. For every country that begins to incrementally move in that direction, some other country either has to pick up the slack or the dollar comes under even more pressure. And the whole thing goes whoosh, in an exponential curve with the dollar's share of global reserves collapsing. Look, it could happen that way. And what would it look like? Well, basically, the US would probably at some point have to put up capital controls. They would simply say that treasuries can no longer be sold back to US banks. If you hold them, that's it. You're going to have to hold them to maturity. And also, they'd probably cease interest payments. And that would be incredibly disruptive for the global economy. But that's the only way the US government would still be able to finance itself, would be to basically stop paying interest on the debt, to close the market in that debt, and of course then henceforth would have to rely on its domestic sources of revenue for any further borrowing. And of course, one wonders how the American people would respond to that, because it would mean they would have to pony up a hell of a lot more in their taxes, and that of course would perhaps lead to a very, very large political crisis in the United States.
Yeah, returning the US to that more domestic financed position would, I think, it wouldn't just be a US social unrest phenomenon due to the manner in which the global economy is configured these days, with the US buying so much from everybody else and everybody lending them the money. We do have a question from Seamus, which applies to this, which is regarding what Saddam Hussein was up to when he was alive. Didn't Saddam do this after the first Gulf War? Only he traded oil in euros, which was in free fall back then as a newbie currency. Eventually propped up that failing currency and profited greatly. From my understanding, Seamus, even though Saddam Hussein did, it was very, very public. I'm not going to sell my oil for dollars anymore. I'm going to sell it for euro. From my understanding, they did actually sell it for dollars because there wasn't that much liquidity in the euro oil market. But as soon as they got the dollars, they swapped them to euros immediately. So it was mostly a PR thing. Though, John, do correct me on that. Do you think when we're discussing countries ditching the dollar, and Saddam sort of did a kind of a version of it, or at least moved in the direction of that? I mean, are we seeing this? Could it be that in rollover, it's something that is going on, but no one talks about it? Is there something similar that could be going on now? It's just no one talks about it because, of course, it's not in anybody's best interest to talk about it, because then it becomes really chaotic.
Look, you don't want to rock the boat until you've got your lifeboat ready. And you could argue that certain actions that have been taken by a number of countries, including Russia, China, Brazil, India, Turkey, and actually Malaysia, interestingly, you could argue there are a number of countries that in recent years have taken actions that could be interpreted as preparing themselves for some sort of international monetary crisis where the dollar is losing its reserve status and there might be capital controls going up, in not only around the US, possibly in many places. And so, that is one possible interpretation of what's going on. And you could say, well, yeah, maybe behind the scenes, there have been lots of discussions about precisely what to do to get prepared. In terms, however, of deliberately rocking the boat and deliberately trying to bring it down, that would be incredibly disruptive. Everyone would go through a difficult time. Therefore, I believe that if someone were to deliberately torpedo the existing current system, bolt out of the blue style, it would be because they felt they had no other alternative. And that's where it is interesting what's happening in Ukraine. It is interesting what's happening with Taiwan and in the South China Sea. The fact is that history instructs that when countries feel cornered, just like an animal, they might be a small animal against a big animal, but once you feel you're cornered, you don't mess around. You seize your moment and you attack if necessary, hoping you get lucky. And arguably, because of US military dominance in so many parts of the world, you could argue the best way to attack is not to attack militarily only, but to attack in the financial markets. And not only then do you do what you have to do in Ukraine or Taiwan or whatever it is, but you simultaneously try to disrupt the international financial market such that the US is unable to finance its war effort for a sustained period of time. And then if you can just hold out long enough, you end up winning because the US can no longer finance its military. Now, in a way, this is not dissimilar from what Japan tried to do in 1941. Most Americans, and in fact, many people around the world, seem to think that in December 1941, all Japan did was bomb Pearl Harbor. That is absolutely not true.
Right.
Within a matter of weeks, Japan took control of roughly 1/3 of the Pacific. And that includes the Pacific Rim as well as key islands out into the Pacific. It was a huge power grab.
Yep.
And they were hoping that just by doing that as a fait accompli, the US would just look at what they had done and think, oh my God, to actually boot Japan out would be so unbelievably expensive. We'd have to double our Navy. We'd have to recruit 1 million, recruits into the army. It would totally blow our budget. And of course, back then, the US was on the gold standard, so they couldn't just issue the money to pay for it. I think Japan was calculating the US just wouldn't be willing to pay the price. So in a way, there was this indirect economic argument. And of course,
Right.
Japan needed the oil fields of Indonesia if they were ever going to have oil to fuel their war machine. So there was that side of it too. In any event, you could argue again, it doesn't line up perfectly, but it's not a completely irrelevant parallel here.
No, it's very interesting, the implicit side of that, because of course there wasn't some financial market attack that took place, and yet that was what was being considered, or at least we believe was being considered, and was implicit in that action. We were discussing Rollover, the great movie that was hated so much. When we're discussing, a country using both kinetic and financial means of attack, this did form the plot of an absolutely terrible movie called Jack Ryan Shadow Recruit, starring Chris Pine and Kenneth Branagh a few years ago, in which the Russians, this sort of Russian rogue general played by Kenneth Branagh with a Russian accent, does this, executes an attack on the dollar using lots of financial currency trading algorithms to try and boost the dollar's value before pulling the rug from under it. At the same time, just in time for there to be, I think it's a terrorist attack on Wall Street. But Rollover is a very good film. Thoroughly recommend you watch it. Do not bother with Jack Ryan Shadow Recruit. Absolutely terrible. And moving on a little slightly, because we have dwelt a little for quite a while on this. I think we could go, as we're still on the sort of geopolitical arena, I think we could go on to the topic of sanctions. There was a headline I thought we could share for this week's show, which I thought was quite good. This is regarding the topic of sanctions on Russia, really intensive and restrictive ones. This is from the Financial Times. US plans sanctions against Putin's inner circle in case of an attack on Ukraine. So this is targeting the oligarchs, who are the incredibly wealthy Russian fellas who support Vladimir Putin. Now, John, I thought we could discuss what are the importance of sanctions for on Russia in general, and how important should we take them as investors when we're looking at investing in, say, Europe, for example, because the Russia-Europe situation is this Gordian knot that will never really be untangled. As much as many people would like to believe that they could be, it simply isn't. So yeah, just in general, could you tell us what is the importance of sanctions on Russia, and how should we take that in our stride?
Well, first of all, I'd say that Russia is actually a fairly self-sufficient country. Right? They grow a lot of food. They have a lot of energy. They have a lot of natural resources and raw materials. They have a much larger and more diverse manufacturing base than they had even 30 years ago. Russia. Look, you take it for granted that a small country cannot possibly be self-sufficient. Russia, of course, is a huge country. So you think, okay, sure, they can be at least somewhat self-sufficient. But even when you adjust for that, they have made efforts to become increasingly self-sufficient in recent years, because the threat of sanctions has not only been imposed from 2014, but there's been the threat of those sanctions escalating from time to time, including right now. So Russia is, better prepared than most countries would be were sanctions to be imposed on the country, or if they go after specific oligarchs. You can't tell me that these people have not made very elaborate plans to try and disguise their sources and movements of funds throughout the international banking system, offshore center this, offshore center that. I suspect they're well prepared for it if it happens. Now, that said, if it happens, I'm sure it will still have some effect. I would be very surprised if sanctions had zero effect. But the idea that they will be the silver bullet that gets Russia to back down in any meaningful international conflict where it feels its vital interests are threatened, no, I don't think so. I really don't. I think it is more. It's more the United States and other countries trying to find some credible way to threaten Russia, which in a way almost exposes their lack of military options when it comes to operating right around Russia's own borders. I think it's pretty well accepted in military circles that when it comes to fighting Russia on its own border, there's really no country in the world that can do that right now. Russia's too good at defending its own border. Now, if you're talking about, Syria, where Russia's involved or has been involved off and on, or somewhere where Russia would rely on some combination of air and sea power to be able to project any meaningful military force, that's a totally different ballgame. But when it comes to Russia's own borders, the fact is that they're able to protect themselves. So I think one reason why sanctions are talked about to the extent they are is because of a relative lack of a military option.
That's very interesting. As the sanctions are projected through the media as being this really hard restrictive move by the US and its allies. And of course, the likes of Venezuela and Iran have been under these for a very long period of time. You'll find a lot of people. I say a lot of people. You will find people who promote Venezuela and the Venezuelan socialist system as being actually perfectly fine. It's just these American sanctions which have caused all of this hyperinflation and problems inside the economy, which I always feel rather skeptical about. But regarding what you were saying there on fighting a battle on with Russia on its border as being quite tricky. We do get a question from Liam, maybe a rhetorical one as it was intended, but saying, why would Putin invade Ukraine and then have two NATO countries, Germany and Poland, on his borders? Doesn't make any sense. Well, what would you say to that?
Well, I do not think that Russia would think for 1 minute that it wants to try and invade and control Ukraine. I don't think it has the forces available to even try. And the idea that you're going to occupy a huge country long term, where roughly half the population hates you, and only and the Russian minority in Ukraine is I forget what it is. It's something like 30 something, maybe 40%. So a majority of the country is going to hate you. It's a lose-lose proposition for Russia. However, if Russia were to fight simply a quick, from their perspective, preemptive war to knock out Ukraine's military in a way that would render it incapable of potentially causing trouble on Russia's border, that's a different ballgame. That Russia could easily accomplish that, and they could accomplish it within weeks. And I think that's all that's being proposed here. I think the only thing that Russia's seriously considering doing is a relative lightning strike to disable the Ukrainian military in the border regions where there are the disputes, such as Donbass and around Crimea. And that's it. Keep in mind, what did Israel do in Beirut some 15 years ago? They simply invaded, not Beirut, I mean Lebanon. They simply invaded quickly to try and render Hezbollah incapable of being a potential offensive force. And they did so as a preventative, quick, lightning war that took, what did it take again? It took 2 to 3 weeks. And in retrospect, was Hezbollah still in the same position to be the same threat? No. So they accomplished their objectives, but did they take over Lebanon? No.
Right.
They went in and they got right back out again. And I suspect something similar is being contemplated here by Russia, because they just don't have the forces to take over Ukraine. They really don't. Nowhere near that.
It's very interesting. But bringing it back to markets, John, there was an interesting comparison I've seen. This is from the Market Ear, which was taking a look at equity returns during the Crimean annexation, which took place in February to March 2014. And this was, I believe it was the DAX, the German stock market index, was down 2%, I think, or it was 2 or 3%. And the FTSE 100 was down 2 or 3%. So, and this was making the overt comparison. Well, if Russia does take action in Ukraine, do we really have anything to worry about as investors in the stock market, especially if we are in Germany or if we are in the UK? And now, that comparison, it's not really the same comparison at all, is it? But if you are thinking about markets and how they might react if Russia took the action that you describe, what would you expect?
Well, it might be very similar. Now, I mean, let's keep in mind that Crimea is a vital national security interest of Russia. There's no way they would let it go without a war. And that's because it's the base of the Russian Black Sea Fleet, which is their only warm water fleet. And so that's a huge issue for Russia, right? There's no way they were going to allow Crimea to fall away somehow or to be taken from them. So I think it was seen very much by the financial markets as a limited move, strictly limited to shoring up Crimea, protecting Crimea, making sure the Black Sea Fleet base was secure no matter what. If Russia goes in and if they communicate clearly, which I think they would try to do, that the reason why they're attacking is just to disable the Ukrainian military and to try and ensure that their border, especially in the east, especially in the Donbass region, is not threatened, and that indeed the overwhelmingly Russian-speaking majority, sorry, excuse me, in the Donbass region is given some form of local governing autonomy, and that Russia's prepared to help defend them and enforce that. If people thought it was limited to that, then I don't think financial markets would get into some huge collapse just as a result of that. Now, obviously, if NATO then challenges that and says, well, look, we don't care if you're saying you're simply going to try and protect the Donbass region. We think you're trying to take over the whole country, and we're going to invoke Article, was it 5? I forget which one it is. And we're going to send, all necessary forces to expel you from Ukraine, then that would be a big deal. But if it's just a limited war, then I don't think the result would be that much different than what we saw when they annexed Crimea.
That's interesting. If you were to try and speculate, and this is purely hypothetical, John, but if you were to try and speculate and you were thinking of the less volatile outcome here, where you don't see a massive counterattack from NATO, is there any asset that you would think of or any currency trade that you would think of that would do well in that situation?
I'd buy the Russian stock market. It's
That's
cheap.
interesting.
Seriously, it's cheap. And it's I just think it's good value anyway. So certainly, if this were to heat up a bit and Russian stocks were to get hit a little bit, I mean, I see that as a huge buying opportunity because, in my opinion, NATO will eventually back down. I think NATO realizes they can't fight and win a war in eastern Ukraine, given how long their supply lines are going to be, et cetera, et cetera. So I think you buy the Russian stock market. I mean, it may sound a bit crazy, but hey, Rothschild said you buy when there's blood in the streets. And I don't want to in any way belittle just how meaningful this conflict is for people who live in that region. But if things got that bad in that region and it was impacting the Russian stock market, because obviously they will initially be seen as a potential big loser of this, I would see that as an opportunity to buy Russian stocks.
Yeah, I guess, to play devil's advocate here, if Russia did do that and there wasn't a NATO counterattack, as you were saying earlier, sanctions are what you do when you can't have a military response, but you want to make it look like you are being more aggressive. If Russia did do that, I mean, I would anticipate there being a lot of sanctions that would be put on Russia. And would that not be pretty bad for the Russian stock market in the aftermath?
Buy the rumor, sell the fact, right? Markets must already be pricing in the possibility that there will be at least a small conflict here.
Yeah.
And they must therefore also be pricing in the possibility that whether they work or not, sanctions will be imposed and will be at least somewhat disruptive if they are. I think that's already in the market. I think it's already mostly priced in. If you get a further knee-jerk sell-off when the bullets start, flying, or the missiles start flying, whatever it is, I think it's a buy opportunity. I really do.
That's an interesting one. If memory serves, I believe Hunter Biden, the President Biden's son, he was pretty well involved with some Ukrainian energy companies. Maybe we could have him on one day on Southbank Live to discuss what his thoughts are on the prospects for the Ukrainian economy. We do have a good question here from Apple, who asked, "Hello, Boaz and John. Putin is getting on a bit. It may be his last push. What sort of regime could follow him?" Very good question, Apple. Indeed, Putin is getting on a bit, John. Is that going to stop him though? I get the impression he's gonna stay on for as long as he can.
Yes, I think that's probably the case. Look, again, I'm not an expert in this at all. Okay, however, I do study history, and if you look at Russian history, you do see a pattern, right? What you basically see is that Russia is a very difficult place to govern. It's difficult to govern for a variety of reasons. There aren't really many natural borders, and so you end up with a really geographically large entity, and it's challenging because your borders also with your neighbors aren't well defined, and so Russia finds itself constantly involved in wars. And you might say, "Oh, gee, that's Russia being aggressive." Well, sometimes it's not that clear, right? The fact is, good fences make good neighbors, and there aren't good fences in Russia.
No.
And so it's a difficult country to govern, and countries that are difficult to govern do lend themselves to somewhat more authoritarian forms of governance than those that have natural borders that are well defined. I mean, Switzerland's a classic case in point. Here you have, a multi-linguistic society that totally gets on with itself, largely because they're all isolated in valleys from one another, and they only hang out with people that they know intimately and have for generations. Anyway, it's a good contrast. I think that if Putin, rides off into the sunset someday, I think the regime that replaces him is going to be essentially a carbon copy. I think he will prepare for his retirement. I think that there will be some anointed successor who will be his deputy for some number of years, who will be someone that the ruling oligarchy, if you want to call it that, fully buys into and believes is the man for the job, or woman, if it comes to that. And I think it's likely you do have a peaceful transition of power. Now, whether Putin's successor will be as successful as he's been, holding the country together, overseeing a period of actually quite astonishingly good economic growth, in which the bulk of Russians have benefited to some degree. Whether that happens or not, I don't know. But that's what I think will be attempted, and who knows? There's a chance that it actually works that way. But is Russia suddenly going to become more democratic? Ugh, I doubt that.
Well, to all those watching, John says he's not an expert, but I think he's far too humble. John certainly knows an awful lot more than the average bear, and indeed, we've discussed all manner of very interesting things regarding Russia this evening. John, we are getting on for time a bit. I thought it would be a good time to go to our long short segment where we discuss something we're bullish on, something we're bearish on. Doesn't need to be assets, of course. It can be behaviors or other phenomena that we are bullish or bearish on, given some of the news that we've seen this week. So, John, what would be your long and your short?
Yes, I believe that given what's going on in the world in terms of infrastructure, in terms of logistical disruptions, there's still this post-COVID hangover. You also have some climate issues regarding severe weather patterns. I actually believe that the industry that is currently underpriced big time vis-a-vis other industries is chemicals, because that includes fertilizer, and it also includes other absolutely essential chemicals, including silicones, hydrocarbons, including plastics, petrochemicals in general. And I believe that this sector has really strong pricing power. And so we're in a very inflationary environment where you want strong pricing power. So I think one way to play all the disruption around food production, all the disruption around logistics, is the chemical industry. It hasn't outperformed at all, notwithstanding a lot of this stuff. And I think therefore it's a really good option here. So I'd be looking to get into to overweight chemicals. Um, And what I'd look to be short is what I've been short already, which is big tech. I find, we've seen some sell off here. I think didn't Facebook get hit?
Indeed,
Uh,
yeah.
but believe me, we're still so far from any valuations that are anywhere realistic, in my opinion. We've still got a long, long way to go in relative underperformance. So I like chemicals here, but I'd still be short big tech.
I think for my long and short for this week, it's actually a mix. From one story that I saw, I believe this is in New York, in that in Central Park that they've got. There's some chap who has made I think it's less than 200 kilos, but it's just a cube of solid gold, and he's just put it in the middle of the park, and it's got its own security detail. 200 kilos of gold. I think it's over, by current prices, it's almost $12 million, or it's less than $12 million. It's incredibly small for $12 million worth of gold. It makes you really think of just how dense gold is and why we cherish it so much. But this is just his modern art thing. I understand there's some cryptocurrency thing that he's trying to do at the same time around this block of gold. But it just made me think I'm probably long gold. I really like it, but I'm definitely short modern art. I don't. It's had an incredibly good bull run over the past 20 years of the modern art market, and the old masters, despite these very rare, rare big events like when Mohammed bin Salman bought that Da Vinci, the old masters have been very much left neglected, while people want to buy these very strange things like bananas taped to walls and all that kind of thing. So I would think in the if we are to see some kind of realignment here, I would be long the gold but short the modern artist who puts it into a cube and then dumps it in the middle of Central Park. But we are getting a bit on for time at the minute. We're just 1 minute past 8 here. I do thank everybody who has tuned in this evening. We have had a great many questions and a great many comments. It's great to have everybody here. Very lively chat, which is always fun. And we hope you shall join us next week for our next show of Southbank Live. Sorry if we didn't manage to answer your question or address some of your comments. We shall be back next week. Sadly, we can't always respond to everything, but it is great to see that a lot of people have been having a lot of fun in the chat. And of course, if you are watching a recording of this, do give us a subscribe and a like if you do like this form of content, as that really does help us out, and we are trying to grow this channel a little bit. That's all from us for the moment. John, thank you so much for joining me.
My pleasure, Boaz. Until next time.
Thank you so much for joining us this evening, folks. That's all from us. We hope you'll tune in next week. Until then, have a very good one. And I hope Cliff got his Guinness in the end. Bye-bye.